Welcome back to the Fox Robbins Business Show. Come on in and sit a while. Relax. This procedure is not going to hurt.
Hardly.
It's going to feel good. This is the Fox Robbins Business Show. This is all about entrepreneurship, small business, anything and everything you ever want to know about entrepreneurship and small business affairs are covered at one time or another. We've been at this for a long time.
Over 10
and
years.
There's no loss of topic matter.
Well, actually, we've been doing the show for 10 years, but we've been at it for many multiples of 10 years.
Yeah, that's right. We're going to talk today about measuring what you manage. You're managing what you measure and so forth, and it's a special article that we've got on that. I'm Bill Fox, the co-host, but the other co-host is a celebrity. You'll recognize him in he looks like Lance Ravantlo, the Indy 500 hero. He's bodacious, he's dynamic, he's electric, he's Coach Robbins.
Mr. Bill.
Coach, looking great.
It's my new look.
Looking great.
Of course, I can't see my notes, so I won't be able to say a damn thing.
Well, it's also a special session that we're having. You can't manage what you don't measure. Another way of saying, if you don't know what the problem is, how are you going to solve it?
That's right. Yeah. You don't even know it's a problem.
Yeah, right. But this was the coach. Is his daily routine is counseling small business persons, but he also gives talks to small, medium, large size meetings or gatherings of people. Right?
Companies up to 500 employees. Basically, I've worked with companies 200-300 employees. By the SBA designation it's a little more complex than the simplistic. 500 employees less is considered a small business, but 90% of the businesses I deal with have less than 20 employees.
Right, Coach. This article, the article that you've written here about managing what you measure, and you give this in talks to groups. This is you call this a long-standing management truth.
It's a mantra, and I have said it literally thousands of times to hundreds of people. No, thousands of people, come to think of it, because when I teach organizational behavior, supervisory management, entrepreneurship at Bentley College, now University, Mass Maritime, where I'm now teaching, I say it over and over and again. How can you possibly make decisions about something you're not measuring? All right? And how do I measure it? Well, therein lies the rub. You got to figure out a way to measure everything.
It's a good place to start.
It's a great place to start. Say, I want to measure this to see if I'm on track. Exactly. Right. You cannot manage what you don't measure. You don't know what to do. You don't know if you're hitting it or not. Or
look, this is not necessarily. It starts in a very uncomplicated way. Like, what were your sales last month?
If I ask one of my clients what your sales last month were, and they don't know, they're in trouble. You should know. Like I've said so many times, I had 6 locations with my company, right? My $22 million company. And every single location, the manager of that location called me at the end of the month. And he said, this is my sales number, and this is how many invoices we wrote. Now that sounds like a funny measurement, doesn't? Number of invoices you wrote. But over the 17 years that I ran that business, 18 years I ran the business, I had figured out, quite frankly, that on average, it was about $150 an invoice. Some invoices would be $1,000, some invoices would be $20, but in the end of it, when you look at it in a big number, You could just take the number of invoices, multiply by $150, and that's just a simple heuristic that said, well, maybe that's what I sold. But I also asked them, what were my sales according to your closing your books? Now, nothing's been checked, nothing's been verified.
Right.
But I knew I had a break-even number. I knew that, for instance, my Fall River store would break even at $150,000 a month. And so when the manager called me and said, we did $186,000 in sales, I think,
So we're in the clear.
oh, I'm probably okay. Then I'm looking forward to the 10th of the month, and every single one of my stores would have their financial statement, their full financial statement on my desk at the end of the month, on the 10th of the month, for the previous month. I want to know what sales were, what was spent on inventory. I want to know what the beginning cash was. I want to know what did we end with cash, because each store had its own checking account, paid their bills independently. They were really run like independent stores, and the manager was 100% in charge and held responsible for all of these numbers, these target numbers that I would work it out with them. It was like a 1-minute management deal. You say, hey, next year, what do you think you're going to sell? All right? What do you think your overhead is going to be next year? You know, if you don't set targets, how do you know whether you hit them or not?
Your measurement, you measure, you start by, you ascertain or determine the measurement of an item.
That's
of
right.
An item.
Yep.
Well, I said sales. I mean,
That's one.
That's one.
Right. Inventory. What was the beginning inventory? What was the ending inventory? That's one.
Also, you say that measurement, you figure by the extent or amount obtained by measuring, like sales. Are your sales growing this year?
Right.
How do sales compare this year to last year?
The same time period.
Same time period.
Absolutely. If last year in July we sold 180,000, this year in July we sold 206,000, you probably got me smiling. Because I know that I break even at 150 in that store, again, to use that example.
Right.
And I'm looking at, I got a phone call that says, well, we did 206,000 this month. Okay, cool. Did 175 last year, the same month. And my break-even number, I think, is about 150. So when I get the financial statements on the 10th of the month, I'm probably in good shape.
Yeah.
But that's really what tells me, because now my controller will have gone to each store and put together the numbers accurately. I want a P&L, income statement. I want to know what sales were, what profit before taxes was, net profit. I want to know, you know what I want to know. I want to know what happened to the cash. CFIMITYM. If anybody's ever watched this show, we've said that about 100 times, and
Right.
I've said it tens of thousands of times. I'd like to know, what was the beginning of the month cash? What was the end of the month cash? Oh, no. Where's the inventory? Is it up or down? There's another item I want to measure. So we know how to manage things. Geez, our inventory is getting a little high. Our cash is getting a little low. Well, buy a little lighter next month, because you can't run out of cash and be in business. That store, if it has to call me and say, hey, we need to meet Friday payroll, that manager's got a problem with me. Now, all of that being said, I had one store that was a perpetual loser. Make a little money one month, lose a little money one month.
Oh.
And I said to them, the end of this year, if we don't turn the corner in this store, I'm shutting it down. We did not turn a corner. I shut that store down.
Oh.
And they knew it was coming. It wasn't any surprise. And guess what? My sales went down the following year, but my profits went up. I'm not in business for sales. I'm in business for profits. And if they're going to continue to lose 20, 30, 40, 50 grand a year, I don't need them. I get rid of them.
These measurements, there's a favorite word, terminology these days called metric. That's a standard of measurement.
Absolutely. It is an inventory is a metric.
When I say
Sales
to you,
is a
what are the
metric.
metrics?
What are the metrics that I'm going to look at? Right. What are the measurements? Right.
Okay, and then I also, I might ask you, what's the benchmark? That's another favorite term.
Sure. Yep.
That's a standard by which others may be measured.
Right.
You know, that is
A benchmark would be for the electrical industry at the time, for a wholesaler between $20 and $25 million, 19% of sales should be spent on salaries. And I don't know if that's the right number, but it's probably in that ballpark.
Yeah.
And I got that from the National Association of Electrical Distributors, with thousands of electrical distributors reporting to NAED. And then I'd look at my salaries and I'd say 17.6%, and I'd say, good. My sales, my salary in relation to my sales is in good shape, very good shape. So that when it comes Christmas time and I've made good money, there's some nice bonuses to be had. My manager of my Cape Cod store got a $25,000 bonus in 1987. That was 30 years ago. $25,000 bonus. Why? Because he ran the store great, and I made a lot of money in that store, and I shared that back with that was just him. I wound up sharing 15% of the gross profit with the employees, and I did that with all stores. And so when that one store that was losing at the end of the year, at Christmas time, only got 2 weeks' pay, and heard, hey, all these other guys are getting 8,000, 20, why aren't we getting it? Because you're not making a profit. That's why. You're lucky you got 2 weeks.
Say, I don't want to skip over something you said that was you said just a couple of minutes ago. That's very interesting. That the people watching this show need to know. You can go. You mentioned a trade association.
Mm-hmm.
Trade associations. I don't know about all of them, but so many of them, actually analyze and study themselves.
Yep.
And provide figures. And you said, the electrical distributors.
Yeah, right.
That trade association, if you belong, they're going to provide you with numbers that are characteristic or typical for electrical
literally hundreds
distribution.
of 20 plus million, 20 to 25 million, I think was the range, all over the country. And so I could compare how I'm doing to this benchmark.
You can also go to a banker. Your bank, you have a relationship with a bank. Go to a banker and say, what have you got, for numbers on my industry?
Yeah.
They have that.
Well, bankers.
That's how they. That's what they use to judge making loans.
That's right. And not only bankers, your CPA can be part of Risk Management Association.
Yeah.
Can be part of many different CPA databases that they can look up for you. Well, I have a coffee shop in a little village and I'm doing, $500,000 a year.
Yeah.
How should my numbers compare? See what benchmark information you can get. Right. Not just a trade association, but from an accounting risk managed RMA is a biggie.
I just want our audience to know that there are places to go.
Absolutely.
You don't have to go around like you're operating in the dark.
There's many people you can seek. I have provided some of that information. When I have time to do some research, we have access to databases. Yeah. We can look up a lot of data. It's just data.
So guys, it's out there.
Go get it.
If you exert yourself.
Exactly.
For measuring, you have to collect data.
Mm-hmm.
You make determinations. You determine how measurements will be expressed.
Right.
Sales in dollars. Thank you very much.
Yep.
And so forth. Compare measurements compared with those benchmarks with the industry.
Right.
Competitors.
Yep. Industry
groups and so forth. And an example you give, let's say there's a company that's not selling goods like you were selling electrical equipment.
Yep.
Here's a company in the paper that you wrote that is a company that does computer programming.
Yeah.
And maybe they need to know lines of computer code per programmer.
Sure. How many lines is each programmer writing? How many should the programmer be writing? Now, if you're going to allow the programmers, and you should, some time to work at home. My cousin is a programmer, actually goes to Florida for February and March because he hates the cold, January, February, March.
Oh.
He still works for the company.
Am I supposed to feel bad for him or what?
I don't feel bad for him. I feel bad for me. But he goes there and he produces code. And he's sitting in his office and he's producing the right amount of code. That's how he's measured. He does a great job, obviously, because he's been there for a decade.
But if that's your company, you should know that.
You should know what he's doing. Right.
Example 2, another example you give in your white paper is number of bugs in the code.
Right.
It's code's written, that's great.
Right.
But codes may have bugs.
If they have a lot of bugs, then he's not paying attention to doing the job correctly. All right. So now maybe he's writing enough code, but it's not the quality that you want. He's maybe going too fast.
Right.
Right. You just need to figure out what it is that's important to be measuring and set a target. You can always move the target, but if you're doing nothing about it, if you don't know what your sales are, you don't know what your profitability is, you're just going to run into a brick wall maybe someday and not even know it. But the biggest problem is, how do you measure it if you can't measure it against something?
Right.
You don't know what to do. You don't even know it's a problem.
Speaking of which, your white paper gives us some direction on that. It's called what to measure.
Right.
Okay, and you said activities that are named in your SMART
Acronym.
goals and objectives.
Yep.
What are you talking about?
And I've said this thousands of times. Set smart goals and objectives. Now, by smart, I don't mean necessarily intelligent, although intelligent is a good thing to do.
Right.
I mean specific. Don't tell me you want to increase your sales next year. Tell me you want to increase your sales by 10% by the end of the year. That is a smart, measurable, right, goal. It's probably attainable. I know who's responsible because I'm probably talking to the person who's responsible. There's many different acronyms, SMART, different words for it.
Yeah.
The ones I like are specific, measurable, achievable. I don't want some pie in the sky goal that says I want to triple my sales next year and I don't even know how I'm going to do it. That's just pie in the sky.
Right.
Responsible. Who's responsible to get this stuff done? And most importantly, timely. I want to increase my sales of my electric heating products, my motor control, by 20% by the end of this fiscal year. There's a smart goal for you.
So if you have an objective,
Yep.
if you ask yourself, is it smart? Is it measurable? Is it attainable? Is it responsible and time related?
Yep.
Then that just says you've got a good a bona fide valid
Exactly.
objective instead of BS.
Exactly.
Okay.
Yeah.
But there's things that you have to explain. There's things called KPIs that you like to talk about, called key performance indicators.
Yeah.
What's that?
Well, I just gave you one in my invoices, my invoice count. For me, that was a KPI, a key performance indicator. I'm saying, I know I do about $150 an invoice. If I do 1,000 invoices that month, I know I did $150,000 worth of sales. And then the numbers come out and it's 157,860 or 180, and I go, yeah, it's a rough idea, but a key performance measurement indicator, KPI,
Right.
one of them for me, and people thought it was silly, but I started doing that when my business was small, when it was $1 million business, and I just discovered, geez, on average it's 150. Like I say, it could be a $10 invoice or it could be a $1,000 invoice. But after you've written 1,000 invoices, it's always $150,000, it seems.
Well, there's a couple of examples that you give that these could have pertained, to your business.
Yeah. Well, I wrote
Which
the
is
paper.
like example 1
Yeah.
is percent revenue from return customers, repeat customers.
Right.
Apparently, you like that one.
I love that one because repeat customers, I didn't have to spend money going out and finding this customer. What is it? Depending upon who you read, whose marketing book you're using, it costs 7 to 9 times as much money to get a new customer as it is to keep an old customer. I want to know how many of my customers are returning customers and what percentage of my sales represented by those returning customers, because quite frankly, those are usually your most profitable customers.
And you also, example number 2 is a percent of customer calls answered in the first minute. That would be a business that's getting calls in
People calling in for
call.
orders or problem, absolutely. I had an inside sales staff, and I had a PBX and an operator, and every time she put a call through to somebody, we got an automatic report from the system that said, you know, on average, Jay is answering his calls in 36 seconds. Geez, that's great, you know. We don't want customers ring, and then get the darn I'm not at my desk, you know. No, take care of the customer. Customer service. I mean, Amazon has built one heck of a company, and the only thing they do really perfectly is customer service, and they really do that well. They don't market, they don't sell, they don't do anything. They give customer service.
Focusing, your paper focuses in on this customer call KPI, just to focus in and look at that item. How many calls?
Yep.
If your business is receiving calls.
Yep. How many phone calls did we get today?
How long to answer?
Yep. And who's getting the most calls? Which of my inside sales staff is getting the most calls? Because obviously, like I say, I had this kid Jay who came from the tech school, and he was actually a truck driver, and then I put him in shipping and receiving, and then I had him out on the counter. And when I was out talking to my customers, I said, "Why do you do business with me?" "Oh, I love Jay. I call Jay all the time." I took Jay, stuck him inside on sales, so a desk, gave him a headphone, and all of a sudden, our sales started to shoot up, and people were calling Jay because he took care of everybody. Everybody.
You also want to know,
I also paid him the most.
You also want to know, do you have enough customer service reps, or are you cheating?
Right.
Are you cheating on it because you say, "Oh, that's costing me money, so I'm going to slice it. I'm going to slice the beef thin."
I never looked at things as a cost. I looked at them as an investment. I'm investing in customer service people, and that's part of why people are doing business with me instead of somebody else. Because, I sold the same things other people sell.
Coach, there's plenty of there's adequate numbers of businesses out there that just say that customer service is a cost,
that's why you get such lousy customer service in so many places.
As a well,
Right.
a deep well that you pour money into.
No, it's an investment.
And
that's what keeps people coming back. And that's why those people that keep coming back are telling everybody else, you don't do business with them, they're fabulous.
And then you talk about how to use measurements, how to make use of the measurements, called a continuous improvement plan.
Yep.
That means, by your definition, define, measure, improve, and repeat over.
And repeat the cycle all over again. It's like washing clothes.
Also communicating up and down the line.
Yep.
That your measurements are current, accurate, and complete.
Yep.
There's, as far as customer service, you are balancing the need for customer service with the customer service reps.
Yep.
So you're not cheating on that.
Absolutely not. And you talk and you manage your customer service reps as human beings, and you work with them. And if they've got a certain weakness, you try to strengthen those weaknesses.
I don't know. Do you send the phone calls to Bangladesh, by the way?
No, I don't want to send them to Bangladesh. Yeah. I know. Nothing about wrong with people in Bangladesh, but I want my problem solved. That's what I want. I want to give you an order. I'd say more, but I want to give you an order. I want to take it and get it out to them right away.
You say you want to communicate the metrics. You don't want to keep it all to yourself. It'd be a big secret.
Oh, no. Everybody has to know how they're being measured.
Up and down the organization.
Absolutely.
Posting team or individual results on things. Pie charts, or line charts. Review the progress. Let the results drive change in the organization.
Yep.
Positive change, that would be.
Right.
What works, what doesn't work, and make corrections.
So what doesn't work, whatever it isn't working, change it.
This would be your plan. This is continuous improvement.
That's the Japanese word. You ready for this one? Put my glasses on, because this is cool. Kaizen.
Kaizen, yeah.
Continuous incremental improvement.
Right.
Japanese word. And that's what you're trying to do. Just continuously figure out what you can do a little bit better every single day.
and you document improvements, you share success.
If it isn't written down, it didn't happen.
Tell your staff.
If it isn't written down, it didn't happen.
Tell people at the water cooler.
Yeah, right.
Reward change agents and
Yes.
people who are making things better. And people who catch on say, the boss wants improvement, I'll show him.
Right. I'll improve. And then you get rewarded with a bonus and a raise, because that's where raises come from.
Right.
Increased profitability. They don't come out of my pocket. They come out of what you're accomplishing in that store.
So you're measuring what's important.
Yeah.
You don't measure everything. You don't go bananas on this.
Measure what's important.
Measure what's important. Publish.
Let everybody
your
know.
metrics. Publish your benchmarks, what you're trying to reach or make better.
Yep.
Reward people.
Yep.
And then start all over again.
Absolutely. Start the cycle all over again. There's a thing called open book management. It came along after I sold the company, but I am totally for open book management, letting people know everything about the company they need to know, where it stands, where it's headed, and what part they play in it, and reward them. You could never steal the people from me. They were too well taken care of.
Coach, this was you can't manage what you don't measure.
Exactly.
A paper that you've written and you've delivered many times. Very important.
Dozens of times.
Thank you for watching Fox Robbins. All of our episodes are uploaded to YouTube for convenience. Go to YouTube and the search box, just type in Fox Robbins, FOXROBBINS, one word, and then bingo into a library of videos, so that you can go and you can pick and choose videos that you would like to see at your convenience.
You bet.
And we will see you guys next time.